In just a bit, you will be hearing about funding FinTech in COVID-19 context. We're so delighted to have with us Ben Marrel, co-founding partner, Breega, and Romaric Rollet, Head of Innovation and Digital Transformation, Crédit Agricole Corporate and Investment Banking. Gentlemen, please.
So hello everyone, I'm pleased to have Ben with us today. My name is Romaric Rollet. I'm in charge of innovation and digital transformation for CACIB. CACIB is the CIB of the Crédit Agricole Group. Okay, so Ben, maybe just before firing the different questions, maybe you can introduce yourself, please.
Yes, of course. So I'm Ben, one of the founders of Breega. Breega is a founders fund created a little more than 5 years ago by myself and two other entrepreneurs. We invest in early stage companies. We have offices in London and Paris, and we are one of the fastest growing VCs in Europe, with close to 250 million under management today. Doubling that up early next year. We invest in a vast, numerous number of different companies, from very early stage, pre-revenue, up to sort of Series A and Series B. And we are very proud and happy to have Crédit Agricole and CACIB as one of our partners.
Yes, I'm one of the guys and girls, by the way, who are part of the Breega committee once in a month, if I remember well. And it's a pleasure to have the different advices in this committee with Ben. So maybe the topic of this interview is around the COVID-19 crisis and the impact on the startup financing. But maybe before the crisis, maybe you can elaborate a little more on how you find startups, how you finance them, maybe what to do, what not to do, how to screen, and everything.
Well, look, it's a very vast subject, and I'm not sure we're going to be able to deep dive into everything here. But to give you a perspective on how we do things at Breega, I think we really applied our entrepreneur's recipe to it, right? So we have an inbound and outbound strategy. Inbound is fairly simple. It's all about branding and making sure that you exist in the investment environment. So, that's one of the reasons why I'm actually a speaker here today. And then outbound, we have our little tools and secrets to sort of go out and find, the best entrepreneurs out there. It's mainly based on network, obviously, and, the relationship we build with strong representatives of the ecosystems. Then the process itself, can take up from, a couple of weeks to a few months. It really depends on how the company structured, the maturity of the founders, the existing relationship we may have with them. I think, there's a bunch of founders who we already know, and therefore, unfortunately for the other ones, it goes a bit quicker, because ultimately it all comes down to the people, right? I think, the way we describe it at Breega is our approach is called VIP. So it's, vision, individuals, and product. But individuals and people is very important.
It's the I between VP, right?
Yeah, exactly. It's the I between VP and look, it's key, and it's very complicated in the sense that, usually when you recruit people, you only focus on one person, one role, and if things go bad, you ultimately can, separate. Whereas when you invest, it's usually a team, it's usually a product, a technology, a market. And once you've signed a check, you can't actually take it out, right? So it's a one play, and that's why it takes a bit of time. I know sometimes it may sound a bit frustrating on the other side of the table, but it's part of the process. And spending time on making sure that, we really believe into the market opportunity, because, once you are okay with the team and you think they're probably the best ones to attack a particular subject, I think then the question is this a real, pain point? Is it a real problem, or are these guys smoking dope and attacking something that doesn't make sense? And, when you spend your time working in tech all day long, and I've been working in tech my whole life, well, you end up, wearing, Apple watches and Oura rings and stuff like this. Is this really representative of the market? This you can question.
Okay, that's how you recognize tech guys, if they wear an Apple Watch, right? Okay. Maybe you can give some tricks a little more. So if I remember well, 1 year ago, I was asking you the exact same question about what is the trick to consider I would say, a fair and relevant investment. And you were talking essentially, if I remember well, about the team and the quality of the team. Can you maybe just elaborate a little bit on this one?
Yeah, obviously, I think, it may sound a bit cliche, but that's what we see, on a recurring basis. I think, ideas can be as great as possible, but ultimately it all comes down to execution, and execution is team, right? So going back to my previous point, if you validate the idea and you think there's a real market for it, well, ultimately it all comes down to the team. And so if you look into it, let's make an example. I mean, social networks is a good one. I think there were social networks prior Facebook and social networks post Facebook. I suppose that prior Facebook, maybe timing wasn't right, so the idea was there and people weren't ready for it. It's like the video calls. I think video phones have been existing for 50 years now, right?
Yes,
so it's not a
sure.
thing. It's just the market wasn't really ready for it at the time, and people didn't want to be seen when they were having a phone call. So timing is of the essence, and then execution, right? So I mean, there were a bunch of people trying to launch Facebook likes or social networks at the time, and Facebook won because the team was incredible. So that's what it is, and that's what it comes down to when you want to back the most world-changing projects on in the tech space.
Okay, that's the second part of your advice. You're right about the timing. I totally agree with you. It's interesting to consider this one because and we do that in banks as well. Make sure that the different business lines are ready for a change, so that the products and the technology are at the right moment and provide the right service to the person inside the bank. So yeah, I totally agree with you. So you have the team and you have the right moment for the right products. Okay, fair enough. Maybe when you go back to March and February 2020, it was the beginning of the pandemic, and it was, I think, quite tremendous for everyone as persons, but also as part of our corporate, our banks, or you, Breega. And when you consider the startups, when you consider them, what happens? Sorry, at this point.
Well, look, excuse my French, but it was a bit of a shit show, to be fair. I think no one really expected anything like this, especially in Europe and the US. I think, the previous COVID, pandemia was not as strong, was not as big, and so didn't impact these regions of the world as much as this one. So people realized, that, the world's going to, be locked down, and a bunch of our founders, they weren't working at the previous crisis, right? So they don't quite know what a crisis is about. So the first few weeks was all about, hey, let's plan for the worst and hope for the best, but let's plan for the worst. And so, a lot of board meetings and preparation of board meetings and debriefing of board meetings, just to make sure that people really appreciated the situation the way it was and the way it could be, because at the time no one really knew exactly what was happening, but making sure that they could cope with it as good as possible, and that's about it, right? Then you try to assess, okay, there's the sanitary risk that fairly soon people understood what to do. Well, they were asked by governments to work from home. That was fairly easy. Then there's a business risk. So try to assess, are your clients going to suffer? Are your suppliers going to suffer? How are you going to be able to provide your service? Are you going to be able to run your business on a normal basis and still make revenue? And then build for the future. So try to assess, is this crisis going to have an impact on the longer run? Because there's obviously one on the short run. But if I'm thinking of the sort of travel industry and people like this, there's obviously an impact on the longer run, and therefore you really need to take this into consideration and be sure to think like any CEO on sort of short, medium, and long run. And that was part of the plan, trying to help our companies there as much as possible. On the financing side of things as well, there's the lucky ones who actually closed their rounds just prior lockdown. I think
Crisis. Okay.
prior crisis. and it's always, it's always easier not to accelerate rather than decelerate. I think, so if you've just closed your round, you haven't started, employing hundreds of people yet, you're still in the plan, so you can adapt that to the situation. Whereas, if you are about to close a round or about to launch a new round, you have the full speed, you're probably still burning, a few millions a year, and then you realize, wow, I need to decelerate, which is much more complicated. So that was the case of one or two of our companies. I know it's been the case of a bunch of companies out there, and it's never an easy task to do. And a lot of entrepreneurs reacted very well. I think governments helped us as well. I think we saw a different response in Europe from one country to another, but all in all, governments supported the economy pretty well and made sure that this first lockdown wasn't as impactful as it could have been. The question now is, we're going through a second one, maybe a third one early next year. Who knows? And that's a bit more. That's a bit trickier.
Yeah, from our perspective in the bank, what was during the crisis, what happened was is we have strengthened the relationship with our clients. Okay, it was really obvious that the relation was more important than before the crisis, just to help our clients, I would say, well, to go over the crisis, but from time to time to survive as well. So have you been into that as well?
Yeah, look, obviously, I think, for a couple of, we have 60 companies in our portfolio today, right? So over 5 years, like we literally invest, in one company a month. So that's, pretty high rate. And obviously, we're fairly open in terms of industries, and therefore some companies, had experienced very different impacts from the COVID situation, both in terms of where they were in their growth cycle, and I talked about that earlier on, but both in terms of their industry. And so, yes, we had to jump in and make sure to help them and support them, both in terms of finance, and we participated in a few bridges and a few internal rounds just to make sure they had the capacity to keep on growing, because we were convinced by their business model and their activity, but also as well in terms of support. I mean, at Breega, we are one of the very few VCs who have an internal operations team, both on talent and biz dev and marketing, and so we help them with all of this just to share our past experience of crisis, which is never very comfortable.
Okay, and the crisis is not finished yet. We still have some waves, and fortunately, we will face more waves than today. But have you been yet into considering the different investments through the glass of the pandemic, and maybe review the way you do investments?
Well, look, a little bit. I think, compared to the sort of previous crisis, which was a financial one back in 2008, 2009, I think the world of tech hasn't changed. I think the reason why we saw such an amazing boom in the tech space over the last 10, 15 years is because we had both at the same time the sort of financial crisis on one hand and tech revolution on the other end. I think 2010 was sort of the iPhone and the cloud and all this tech that supported the wave we saw. I think the current one, there's no particular technology that emerged. I think there's nothing particular for now. Maybe we'll see something in the coming years or the coming months, and it may change the whole analysis, but there's nothing pointing out as of now. Quantum computing is a bit further away. Yeah. AI has been around for a few years now, so there's nothing kind of.
There's no new big trend.
Yeah, there's not a big trend exactly at the same time as the crisis. So we probably won't see the same burst as we saw back in 2008, 2009. However, we're seeing an acceleration of it. I take this example all the time, but my dad, who's 65 years old, he wasn't able of doing a video call, 6 months ago, and now he's just crazy with it. Like, he video calls me all the time, and video calls his little daughter. So I think it's
the same for some of our bankers, even though they are not 65, but
it's true. Right? So it's accelerating the trend, which I think is cool for tech. The other one is, we don't seem to have other solutions against pandemic yet than lockdown, and it sounds very backwards if you think about it. Like, it feels like we're back in the Middle Ages where people had to lock down when there's a pandemic, and we don't have anything yet to counterattack this. So I think that people may think of the business in the pandemic now. So I mean, that's sort of how our mindset as investors is going to change. It's like, okay, this may be recurring in the future. We don't have new solutions yet, so people may be locked down, impacted if lockdown happens again in 2 or 3 years, or is this business going to thrive? And I think there's a lot of cases where we see businesses thriving. I mean, e-commerce and marketplaces and online banking and all of this is kind of accelerating, and it has even more sense when you're confined. So I think it's rather good news for this type of businesses.
Okay, well, thank you, Ben, because I think you have finished by some kind of hope for the future after the pandemic. So that's good. So thank you very much, Ben. Thank you for this interview. Have a nice day.
Bye.